Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the fine print and figure out if that merger is a good deal or a complete mess. Today we are diving deep into Anywhere Real Estate's latest quarterly report. Think of this as a peek behind the curtain to see how this massive real estate company is doing, especially with a big merger on the horizon. Stick around because we might just uncover if this move is a game changer or a real estate gamble. And hey, if you want more of these deep dives, make sure you hit that subscribe button and join our Discord community linked below. This report, filed for the period ending the 30th of September 2025, gives us a look at the financial health and future plans of Anywhere Real Estate Inc. and its subsidiaries. Let's get straight into the numbers. For the 3 months ending the 30th of September, Anywhere reported total revenues of $1.626 billion. That is a pretty solid number, showing that the company is still bringing in substantial income. However, when you look at the bottom line, things get a bit more complicated. For the same 3-month period, the company reported a net loss of $13 million attributable to Anywhere and Anywhere Group. This is a significant shift from last year when they actually had a net income of $7 million for the same period. It looks like profitability took a hit. Now, let's talk about earnings per S-Share or EPs for the 3 months ending the 30th of September 2025. The basic loss per S-Share was $0.12. This is a direct result of that net loss we just talked about. A year ago, they were posting basic earnings of $0.06 per S-Share. Looking at the bigger picture for the first 9 months of the year, the net loss was $63 million. This also compares unfavorably to the prior year's 9-month period, where they also had a net loss, but it was a smaller $64 million. When we look at cash flow from operations, it is telling for the first 9 months of 2025, the company used $15 million in cash from its operations. That is a big drop compared to the same period last year when they actually brought in $37 million in cash from operations. So they are burning through cash at the operating level this year. On the financing side, there was a lot more activity. In the first 9 months of 2025, they had $91 million in cash provided by financing activities, a significant jump from just $3 million in the same period last year. This was largely due to issuing new debt and repurchasing old debt, for example. They issued $500 million in new senior secured notes, but also repurchased a good chunk of their exchangeable senior notes. It seems like they are restructuring their debt. Now, what is the big story driving these financial moves? It is this merger agreement signed on the 22nd of September 2025 with Compass. Essentially, Anywhere Real Estate is going to be bought by Compass. Each Anywhere share will be converted into a fixed number of Compass shares. This is a huge deal, and it is clearly influencing many of the financial decisions being made right now. But mergers are tricky business. The report highlights quite a few risks associated with this deal. They could face regulatory hurdles, their stockholders might not approve it, and if the deal falls through, Anywhere could be on the hook for a hefty $200 million termination fee. Plus, the uncertainty around the merger could distract management, hurt business relationships, and even lead to unexpected costs. Beyond the merger, Anywhere faces broader market risks. The real estate market is described as cyclical, and downturns hit them hard. Things like high mortgage rates, low housing affordability, and inventory problems all play a big role. They also mention changes in industry rules or practices as a major risk. This is particularly relevant given recent lawsuits challenging how real estate agents are paid. And it is not just about the market. The company also points out risks related to competition, their ability to execute their business strategy, and even the impact of evolving technology like artificial intelligence, which they are trying to integrate. Let's talk debt. Anywhere has a significant amount of debt. This is a big concern, especially if the market turns down. It could limit their ability to grow, affect their liquidity, and make it harder to manage their financial obligations. On the accounting front, PricewaterhouseCoopers LLP reviewed their financial statements. They confirmed that their interim financial statements seem to be in order for accounting principles generally accepted in the United States. Looking back at the income statement for the 3 months ending the 30th of September 2025, gross commission income was $1.323 billion. This sounds good, but the costs associated with generating that revenue also went up. Commission and other agent-related costs alone were $1.067 billion. On the balance sheet side, total assets were $5.743 billion as of the 30th of September 2025. On the liabilities side, total liabilities stood at $4.223 billion. That means they have a lot of debt relative to their assets. A significant portion of their assets is goodwill, which is an accounting term for the value of a company's brand name, customer base, and related concepts. They have $2.499 billion in goodwill. This often means they acquired other companies for more than their tangible assets were worth, hoping to gain value from their brand and customer relationships. The debt structure is pretty complex. They have $500 million in 9.75% senior secured second lien notes. That is a high interest rate, and it shows they are paying a premium to borrow money, likely due to their existing debt load or market conditions. The company is also undergoing a major internal transformation called Reimagine 25. This is all about improving their operations using technology like AI and becoming more efficient. They are spending money on this, with a total expected cost of $33 million for personnel, facilities, and other changes. Now, for the legal side, Anywhere is involved in some major lawsuits. They agreed to a settlement for $83.5 million related to antitrust claims from home sellers, and they are also dealing with Telephone Consumer Protection Act lawsuits, with a settlement of $20 million. These legal battles are expensive and can significantly impact their finances and reputation. Looking at the big picture, the pending merger with Compass is the most significant event. The fixed exchange ratio means the value Anywhere stockholders receive depends entirely on how Compass's stock performs. If Compass's stock drops, so does the value of the deal for Anywhere shareholders. This is a classic risk in stock mergers from a Warren Buffett-esque perspective. Anywhere Real Estate is navigating a tough market with high interest rates and uncertain economic conditions. Their revenues are holding up, but profitability and cash flow from operations are a concern. They've taken on significant debt, making them vulnerable to market downturns. The merger with Compass presents a potential upside, but also carries substantial risks, including regulatory hurdles and integration challenges. The key question is whether the synergies from the merger and their internal transformation efforts will outweigh the market headwinds and the financial strain of their debt. Right now, it feels like they are trying to manage a complex financial situation in a challenging industry, all while betting on a big merger to turn things around. That's our breakdown of Anywhere Real Estate's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussion. Thanks for watching. See you next time.